What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today's newsletter and obviously the video is about the different tactics we can use in the overall 920 crossover strategy. I mean, that's essentially what it is. I get this question asked all the time. How do you play it? Well, there are multiple ways to play the 920 crossover strategy. But before we get started on the tactics, folks, I need to clear up a few things. Number one, from a definition standpoint, major levels. I like to take my trades out of major levels and major levels only. And then it kind of begs the question, what's a major level? For me, I'm looking at pre-market high. I'm looking at pre-market low. I'm also looking at 30-minute double tops. Those are called supply zones. Something happened at that level to push the price action back down. So again, that's a supply zone up top. I'm also looking at 30-minute double bottoms, which are called demand zones. Okay, so something happened at that level and it pushed up at that specific level. Now, remember, folks, the higher the time frame, the stronger the level, and the more volume at a specific level, the stronger that level is. So always pay attention to the volume. That's why, again, folks, I'm a big proponent. You guys know me. I'm a big proponent of using what's called volume profile, because the volume profile will show you both short-term volume and long-term volume. So when you combine all of these things, folks, again, major levels in the 920 crossover, along with the volume profile, it's a really, I'm not going to say it can't be beat. I mean, there are so many good strategies out there, folks. There's many profitable strategies as there are traders in the market, folks. There's no one best strategy. There's just not. If there was one best strategy, it would just be called the strategy, and that's how everybody would need to trade. And then it wouldn't work anymore because, it just you get too many people using it. But now the 920. An argument against using the 920 before I go into my tactics is it's a lagging indicator. Okay, that's fine. I don't care. It is a lagging indicator. Every indicator that you use in the market, maybe it lags just a little bit. But once I start showing you the different tactics within the overall strategy, I will explain. And you guys have seen my videos before, when I'm talking about when I'm specifically talking about specific trades, what I'm looking for, and this kind of thing. You can see exactly how that 9 acts as support on the way up and it acts as resistance on the way down. So we're always shooting for targets. We always have a target in mind. It can be a line on a screen. It can be something. It can be something different. But again, we use the 9 as support on the way up. We use 9 as resistance on the way back down. It's simple, folks. I mean, it's really simple. So the first tactic, folks, is called a major level jump. Why is it called a major level jump? Well, it's called a major level jump because right here on this candle, we're taking it directly off of a major level. Now, we're taking it before we get to the 9. We're taking it before we get to the 20. So the result is we're getting in way before the cross of the 9 and the 20. So again, yeah, they're lagging. Use this, again, major level jump. This candle right here, it's on this 30-minute level of support. So again, we're jumping it before. So here's what we need to watch out for when we're making this. We're jumping the cross. That's all we're doing. We're jumping the cross by, in some cases, several minutes. So in this case, let me see. This time was 15:45. We didn't get the cross. So you're 10 minutes. You're 10 minutes into this play before you get the cross. And there are people who go, well, that's why you don't use the cross. Well, that's why we have different tactics, folks. That's why we have different tactics in the overall strategy. For that reason right there. Now, when we're below the 9, but above that major level, or below for puts, take that trade directly on that major level and use that major level for support. Now, if it breaches back to the downside, you know what to do. You got to cut the trade. You have to know exactly where you're going to get out of that trade before you put on that trade, folks. And we talk about that all the time. So again, this is a major level jump. It's basic. I mean, this is basic support and resistance right here. Now, watch out for the 9 because the 9 oftentimes will act as resistance. You butt your head a couple of times. Now, once you get into this area right here, and I call this the fishtail. This is called the fishtail. This is the space between the 9 and the 20. I call it the fishtail. Because a lot of times it looks like the tail of a fish. I came up with two terms, folks. One is the fishtail, and the other is the double cross. We'll talk about the double cross as a tactic here in just a few minutes. But again, you're jumping the trade right here off of a major level of support to the upside or resistance to the downside if you're looking for puts. So here's your entry. And any one of these candles right in here, again, support. And if you breach it to the downside, you get out of the trade. It's that simple. But again, it must be at a major level. Don't forget that. It must be at a major level. Now, once you get into the fishtail, what we're looking at, and in this case, we've got VWAP right here. So we're always looking for the rejection off of VWAP. VWAP is going to be, you can consider that obviously a major level. So always look for the rejection off of VWAP and look for the rejection off of the 20 also, because we have a play, it's called a continuation play, where we actually take a rejection off the 20 and then it continues in the dominant direction, the direction from whence it came. You know, it was pushing down. We get a bounce off the 20 back to the downside. We can play that as a continuation play. Advanced tactic, though, folks. Do not worry about that right now. So we're always watching out for the 20. Now, once we get the 20, what do we have? Well, we've got the 9, we've got the 20, and we've got the VWAP in this case, all acting as support. This 9's lagging behind a little bit, but guess what? We're using these levels, probably the 20, and then once that 9 catches up, guess what we're going to do? We're going to use the 9 as support. So the 9 is support up to our next target, wherever that target is, folks. And my recommendation is, and this is at the end of the day. This is at the end of the day on a little over a week ago. So it's late day play. But wherever your target is, make it a major level. Again, 30-minute double top, 30-minute double bottom, or something that has happened during the trading day. Use that. Now, if we breach that level to the upside, we're in calls, use that level as support. Wait for the 9 to catch up and then use it as support to the next level. If you breach support, guess what? Take yourself out of the trade. It's that straightforward. There's nothing easy about what we do, folks. But it is straightforward. It is all rules-based. Everything we do and everything you should do, I would think, as a trader, should be based on rules and your process. That's it right there, folks. It's all about the process. So that is the first, that's the first tactic. Second tactic, let's talk about that real quick. This is called the fishtail play to the upside. So here's the fishtail play. What is the fishtail? Well, the fishtail, simply put, is the space between the 9 and the 20. And again, we want to take this play off of a major level. Why a major level? Well, number one, it's easier to predefine your risk before you ever put on the play. And if you don't do that, folks, you're kind of cruising for a bruising. Again, we got a major level down here. We've got this, we got VWAP. So we bounce off the VWAP, bounce off the VWAP, and then we get in on the fishtail. So here's the benefit to using the fishtail. I really, really like this. It gives us multiple levels of support. That's why we use the fishtail, folks. Gives us multiple levels of support. We have support right here on the 9. And if we breach to the 9, we still got this support down here on VWAP. So again, you have multiple levels of support. That's kind of cool. I mean, you think about it, look at it. You got support right down here on VWAP. Then the next level up, you're in the fishtail. You got support on the 9. It tried to pull back just a little bit. Not a big deal. And then that next candle, look what it did. It ran up and we got to close over that 20. That's it. That's the fishtail play right here. And the same thing, folks, the same thing. Use your 9 to your major level. Your 9 is support to the major level. That's it. I mean, that's as simple as it is right there, folks. No, and again, another thing, don't watch your P&L while you're in the middle of a trade. Please don't do that. It's not necessary. You're not trading your P&L. You're trading the candlesticks. So watch the candlesticks. Again, this is the fishtail play to the upside. Now, the first, this one over here. So again, we'll get back to this one. The major level jump, that is considered the most aggressive because you only have one thing supporting you. You've got your major level. You don't have your 9. You don't have your 20. So you've only got your major level. And as a matter of fact, you've got resistance in the 9, resistance in the 20. So that is the most aggressive way to play this. Second most aggressive way is the fishtail. So once we get into that fishtail, again, folks, we are always, always, always watching for that 20, whether it's upside play or a downside play. You're always watching for that 20 to act as resistance. If you're moving up, or that 20 is going to act as resistance. Now, once you get through that, folks, sit back, relax, and trust your 9, folks. It is so important that you trust the 9 as support. Again, go to the next level, use that level as support, wait for the 9, then allow that 9 to push you up. Again, folks, test it. Test it. Go back. Do some live trading. Whatever you got to do, test it, guys. But again, trust that 9. Anyway, that's the fishtail play to the upside. Now we're coming up to my favorite setup. My favorite setup. It's called a double cross. So a double cross happens. Let's talk about to the upside first. A double cross happens to the upside when we open below the 9 and close above the 20. Okay, seems pretty straightforward, and it is very, very straightforward. You're still jumping the cross because you got a 9, you got a 20. But you're jumping the cross by a couple of minutes, but it's a double cross. Now, when that happens at a major level, folks, put on the trade. As a matter of fact, if you can get like half above and half below, excuse me, at a major level on a double cross, buckle up, because generally speaking, you are looking for, generally speaking, those are really, really, really strong plays to the upside or the downside. So to the upside, remember, double cross, we open below the 9, close above the 20. To the downside, we open above the 9 and close below the 20. That's called a double cross. And again, folks, I lay claim to 2 things and 2 things only. That's the double cross and the fishtail. Other than that, it's just the 9-20 crossover strategy and the different tactics that you can use. Now, the beauty or the big, big, big benefit of the double cross off of a major level is this. You have 3 different areas of either support if you're playing calls or resistance that you can work with if you're playing puts. Remember, for calls, you're directly above a major level, and then you got the 9, and then you got the 20. So you have 3 areas of support that you just get to kick back. You don't have to worry about a 20. You're already past the 20. It's a double cross. Hey, what could be better? Again, folks, this is my favorite tactic of all the different strategies, whether that be to the upside or whether that be to the downside. This strategy right here, it's not as aggressive. It's not as aggressive as, either one of the first 2 plays. So it's not as aggressive as the major level jump, and it's not aggressive as aggressive as the fishtail play. But again, you're trading that aggression and trading maybe a little bit of movement for a little bit of extra, I hate to use this word, but a little bit of extra safety, because again, you got 3 different levels of support if you're in calls and 3 different levels of resistance if you're in puts. Again, that is double cross is my favorite strategy by far. But again, folks, remember, you must, well, you don't have to do anything. This is a recommendation, but, just, hey, take it for what it's worth, folks. Again, study, and then work on one tactic at a time. Now, again, the double cross off a major level is the best way to go. Now, the last tactic, or the fourth tactic in the overall strategy, is the conservative strategy. And I call it the conservative strategy because you're not jumping anything, okay? So you're not jumping anything from a major level down here or some play over here. You're actually waiting for the cross. So let's talk about the cross to the upside. So we need a 9-20. Your 9 needs to cross your 20 to the upside. And then once you get that first green candle after the close or after the cross, that's your signal to get in, okay? To the downside, it's like this. You get a cross, your 9 crosses your 20 to the downside, and then that first red candle that closes after you get a cross, that is your signal to get into the puts. Now, and again, these are conservative entries. The only issue with these, and it's conservative, these have the lowest potential. They're probably among the safest. I kind of think maybe that double cross is even maybe a little bit safer. But this is, again, it's conservative. You have a bunch of different levels of support. You have a bunch of different levels of resistance. Your yield, your potential return on the conservative entry is the lowest of all 4 tactics. So again, if you can jump the trade, or you can take a fishtail, or you can take a double cross, those are better entries than the conservative play. But see, here's the thing about this, folks. Here's the thing, and I recommend to all of our traders when they're talking about how do I play this, how do I play this. My recommendation on how to play this is, number one, pick a single tactic in the overall strategy. Okay, whether it's, and generally, I'm not really looking for, when you're learning the strategy, not a big fan of jumping the trades. So jumping the trades at a major level, only because you don't have a whole lot of safety there. My preference is either the fishtail play or the double cross, you can even do the conservative entry if you're just in a test mode or something like that. But focus on one and one only, and get really good at that one. But if your edge doesn't present itself, you don't trade. But again, you're only looking for one thing. That's it. You're not looking for all 4. You're not saying, okay, it could be aggressive, it could be a double cross, it could be conservative. No, you're only looking for one. Now, once you get really, really good at that one tactic, then look at another tactic. And then look at another tactic and another tactic. And again, you got upside and downside. So essentially 8 different ways to play. So that's your overall strategy right there, folks. And then we'll talk about exits at some other time, folks. But that's how those are the different tactics in the overall strategy. So hopefully I kind of cleared this up just a little bit. Again, the newsletter's coming out and the video is coming out at the same time. So hopefully you can use both of those things right there and get just a little bit better every day, folks. We don't have to get a lot better every day. And we are only interested in not perfection, folks. We're absolutely not interested in being perfect, but we are interested in progress. We just want to get a little bit better every day. As a matter of fact, I was talking to the group today and I said, I want you to put something in your calendar for 1 year from today. It's actually I had them put it on a year from Friday. Okay, so that's going to be February 6th of next year. And the message was simple. The message was really simple. It was 3 words with a question mark, and those 3 words were discipline or regret. I mean, think about that, folks. You can there are basically you can either be disciplined or you can have regret. Those are the 2 types of pain that you're going to suffer. You can suffer the pain of discipline or suffer the pain of regret. You're going to look back at some point. And that's why I said a year down the road. So a year down the road, put this on your calendar. Is it going to be discipline or is it going to be regret? Again, folks, if you get a little bit better every day, if you commit to yourself to getting just a little bit, just marginally better every single day, if you commit to getting better every day, you will be blown away at where you will be, or where you're going to be a year from now, and you're going to look back. That's going to pop up on your calendar, and you're going to go, I remember that day. I remember that day. And because I have been disciplined, and I have disciplined myself to follow my strategy, guess what? I don't have to worry about the pain of regret. Anyway, folks, hey, that's my time. Anyway, I mean, you guys know the deal. Smash that like button. If you like our videos, go ahead and smash that like button. Leave us a comment, all that kind of good stuff. Share with friends, neighbors, trading community. Share it if you like it. If it's of value, share. We would appreciate that. Now, if you guys are interested in live daily trading, where we talk about these things all day long, folks, this is all we do all day long. Okay, head on over to Trading Dakota. That's our live trading Discord. We are so convinced that you will find a lot of value in what we do. Guess what? We're going to give you that first week for free. If it works out for you, hey, you know what? I know it's going to work out for you. So it's going to work out for you. Now, if you are interested, and why wouldn't you be? Because you're watching these videos and you're getting the newsletter. If you're interested in that weekly newsletter. It comes out every Saturday, folks, 11 o'clock Eastern time, with the video attached to it. Head on over to 920trading.com. The entire strategy is there for the world to see, folks. And again, these videos, I'm talking about the strategy and showing how we play, or how we take care of or play the different tactics in the overall strategy. But again, 920trading.com, the entire strategy is there for the world to see. You don't need to spend thousands of dollars on some super secret strategy that, guess what, folks? It's not super and it's not secret. It's like anything else, folks. It's already been out there. But that's what we're doing right now. We're explaining the different tactics in the overall strategy. You know what? There's people that spend thousands and thousands and thousands and thousands of dollars for what this is. What's contained in this video right now, they're spending, these people, $13, $14, $15, $30,000 for this information right here. Yep. You guys know those people. But again, folks, I hope everybody has a great weekend. We got the big game coming up too. I hope you enjoy watching the big game. But we're going to do this again next week, folks. We're going to trade next week, and we're probably going to have some videos also. But hey, I hope everybody has a great weekend. Enjoy the big game. Yeah, and you guys know the rest. Until next time, folks, have a great day. Study, study, study. Trust yourself to trust the process, and we will see you in the markets.